Hello, everyone. My name is Guy. I'm the CEO of Bancor. It's my first time in Moscow. Very excited to be here. And today I want to tell you a little bit about my experience in blockchain. I've been an internet entrepreneur for the last 15 years, and I got into blockchain in 2011. And in the last 6 years, I found that it's very challenging to explain blockchain to people outside our space. So I'm sure everybody here is very familiar with why it's such a big deal. But in order for blockchain to go mainstream, we need to be able to explain it to regular people. And one of the things I found is helpful in explaining the implications of blockchain to people is actually to take a step back and explain something very basic, which may seem obvious, but tends to not be so obvious to people. And it's the difference between information and value, value meaning money. And so let's just talk about it for a moment. You know, information is something where if I send you some texts or a picture or a video, you can send it to your friends, they can send it onward to other people, you can send another copy of it and another copy of it and another copy of it. But value, money, is fundamentally different. In when I send it to you, I don't have it anymore, and now you have it. When you send it to somebody else, you don't have it anymore, and now they have it. Right? This is the fundamental difference between information and value. And if you think about it, information and value, these are the two basic protocols we have as human beings. If I put you anywhere in the world and you speak the language and you have money, you'll be okay. If you have only one of them, it's going to be a little bit more complicated. And so obviously the internet has become the global standard for the exchange of digital information. But value requires a database, right? Value requires a ledger. We need to keep track of how much money I have in my account and how much money you have in your account. And when I pass you money, the ledger needs to update. We need to make sure there isn't a double spend. And somebody needs to secure that database. Right? So who secures the database? The banks. Right? The banks are the trusted third party that maintains the global ledger that runs all of our lives. Until Bitcoin. Right? This is the real revolution of Bitcoin. This is the real revolution of blockchain. It's the first public database using public keys and private keys. It created a mechanism by which you do not need a third party to secure a database that maintains the value between people. And very quickly, of course, we get to the second generation of blockchain, which already allows for the creation of thousands. Today we already have over 1,000 different custom currencies. And I think it's maybe important to note that this is the first killer app of blockchain. And the way I like to think about it is it's decentralized financing. For the first time, people can use a currency to actually raise money in a way that's superior to all the ways you can raise money today. You can let small investors in, you can let large investors in. You don't have the overhead of needing to have only accredited investors who need to go to lawyers and sign 60-page term sheets. It removes all barriers to entry for crowd financing. Now, solving the technological problem for moving money between people, value between people, that's one piece of the puzzle. But there is a second challenge in the blockchain revolution. And this is an interesting problem in economics that's known as the double coincidence of wants. And this problem, it sounds like a complicated term, but it's a very simple concept. It basically says that it's very rare to find two people in real time that have opposite wants, right? So, let's just use a couple examples, right? In the domain of information exchange, a long time ago, if we wanted to exchange information with each other, we needed to meet in real time and talk to each other. And if we weren't there in real time to talk to each other, we couldn't exchange information. So we had a double coincidence of wants in information exchange. And of course, writing, the invention of writing, solved that. Today, I can read something that Socrates wrote thousands of years ago, because we've separated the moment that one person transmits the information and another person consumes the information. In the world of barter, you also have a double coincidence of wants. I'll come with my tomatoes, you come with your carrots. We need the perfect coincidence of circumstances at that moment in order to have a deal, right? Very rare double coincidence of wants problem. So how do we solve this? We solve it with money, right? And we separate the buying from the selling. And with the invention of money, we can finally have specialization, right? Without money, we couldn't build pianos, we couldn't build cell phones. It required the collaboration of thousands of people. We'd all be focused on farming so that we could survive. And slowly, we see the evolution of money to the point where now every nation has money already for a few hundred years. And of course, we all know that if your money can only be used locally, but not globally, it has limited utility, right? You need your money to be exchangeable for other forms of money. And here we run into one of the biggest challenges in the promise of blockchain, which is the liquidity barrier. All of these new currencies that are emerging have a liquidity challenge because they also suffer from a double coincidence of wants. There is no money for money, right? If you think about it, money works like barter today between currency trading. So the dollar has a price to the yen and the dollar has a price to the euro. And when I want to exchange my dollars for euros, I need a double coincidence of wants. I need somebody who wants to buy my dollars for those euros and vice versa. Right? But I think this is where this new generation of blockchains become really exciting, because with the use of smart contracts, for the first time in history, in the history of mankind, there is a technological solution to the double coincidence of wants in asset exchange, in currency exchange, which, by the way, exists for stocks, not just for currencies, but for every kind of digital asset that we want to exchange. And why do smart contracts solve this? Because this is the first time you have a situation where programmable code can hold money in an immutable and trustless way. It just never existed before. And using smart contracts, we see now the emergence of a whole new category of cryptocurrencies, which has just begun, called smart tokens. And these are cryptocurrencies that can automatically exchange themselves for other currencies. They can price themselves with other currencies. They do not need to be listed on an exchange. Whether that exchange is centralized or decentralized, they do not need to match two parties in order to convert themselves. And what we see here is that the emergence of smart tokens and smart contracts is going to unlock what is called the long tail of user-generated currencies. You know, what is a long tail? A long tail is, it's something that happens on the internet when you remove barriers. When you take something that used to have a high cost of failure and you make it a very low cost of failure. Right? So let's just take some obvious examples we know about. YouTube, right? It used to be very hard to broadcast video to millions of people around the world. You needed to buy a TV station, or you needed to get a TV station to agree to broadcast your video. It's a very high cost of failure. So you won't try a lot of things. But the moment YouTube opened it up to everyone, it made it no cost to try this, we see the emergence of the long tail. And you know, there's this interesting mathematical phenomenon. My partner and I, we created a company called MetaCafe, which was kind of the YouTube before YouTube. We had 50 million users. And we thought that that's it. We're going to be the biggest video sharing site in the world. And of course, you know, we all know about YouTube. And we all know that there's no room for second place sometimes. And so what did we miss? We brought you the best videos in the world. And 50 million people came every month to see those videos. But YouTube unlocked the long tail and focused on the long tail. And it turns out that the long tail, all those little videos with 500 views, 1,000 views, when you add them all up together, they're 2 to 3 orders of magnitude more than the hits, than the most popular videos. And so the exciting thing for us now in blockchain is that the emergence of a long tail of user-generated currencies, which is just beginning now, and it's beginning because of smart contracts that can solve the liquidity problem, is going to unlock a long tail of cryptocurrencies. And if today the hits are worth 30 billion, right, if we add up all the cryptocurrencies, The long tail is worth trillions, not billions, trillions, and it hasn't yet been realized. If you want to learn more about the long tail, you're welcome to visit our site, bancor.network, and I'm going to be around today and tomorrow, happy to take any questions. Thank you.
Аплодисменты. Okay. Wait a minute. Maybe you have some questions. Guys, вопросы есть у вас какие-нибудь господину?
Sure.
Thank you for the talk. My question is, you said that smart contracts enable us to move all the barriers to entry from the investment. But my question is, do you see some risks if we, so these long many-page documents that you mentioned, maybe they exist for a reason, and maybe if we get rid of all of that, we increase the risk and possibility of a smart contract being hacked or being abused in some other way increases. So what do you think about risks?
Yeah, so first of all, it's a great question, and I think that the way to answer that question is to think about it in two phases. We are today in a little bit of a wild, wild west, right? It's like somebody discovered gold and everybody's running now to go mine it, right? So the laws are not exactly clear. The smart contracts can be hacked like we saw with the Dow, but as time passes, we see that these problems increasingly get resolved. Right, so I would say that we are in a risky moment in time, and people should do their due diligence before they make investments or before they release products. You should, use best practices and have audits. We're conducting an ICO on the 30th of May. We're having audits from multiple sources, including core developers in Ethereum that are responsible for security. We do that to try to be on the safest side that we can. But I think long term, as regulation is put in place, I think this is going to democratize financing. And I can tell you that from what I see in ICOs today, the level of due diligence that you go through from the crowd, from the audience, is more than I ever went through raising financing. And we've raised 10, 20, $30 million rounds, and I never went through the kind of due diligence from an investor that I'm going through from thousands of people on the internet that are looking at every little piece of my history and every little sentence and everything I ever say. So I think that's generally a great direction, and I think that we're also starting to see the emergence of different platforms to help people figure out what's a scam, what's a good investment. There's friends of ours, actually a group of really brilliant Russian guys that have a platform called Wings, which is kind of doing wisdom of the crowd, where people are doing forecasting and are incentivized to give accurate forecasts to which ICOs are going to be successful. So I think these kinds of tools are going to make it safer and safer to play in this space.
Yeah, thank you. Maybe any other questions? Еще какие-нибудь другие вопросы? Okay, so thank you so much. Thank you, Guy.